Okay, so I could not let today go by without making a commentary about what's going on in the financial markets. Everything that I've been talking to you about now for over a month is coming true. So let's talk about it. Okay, so for those of you who are not paying attention, let me alert you to what's going on in the financial markets. Okay, so today is Thursday, April 3rd. And today, the stock market ended up down more than 1,600 points. And it started out with a gap down of about 1,400 points. So a gap is when a stock or market or any kind of financial product, the term gap refers to when a stock or the market opens up at a significantly lower price than where it closed the previous day or up. Now I'm going to talk to you a little bit here. Now I'm going to explain a little bit here about basic technical analysis, okay? I'm going to explain to you how gaps work. Now, there are three types of gaps. The first one is known as the gap and consolidate. The next one is called the gap and fly, where the market gaps up and just keeps going. And the other one is called the gap and crap. Now, what I'm about to tell you about gaps works in both directions here, okay? Now, I'm going to use the term stocks because it's more convenient, okay? But this phenomenon works in every kind of financial vehicle that we're talking about. The least common gap is the gap and fly, where the markets or stock gap up and just run for the rest of the day. That's the least common. The second most common is called the gap and consolidate, where it gaps up or down and then goes sideways. But the most common gap is called the gap and crap. That is where a stock gaps up or down and then gives it all back or a good portion of it back. That's the most common form of gaps. So I got some emails today and some comments today asking me what I thought the market was going to be doing going forward. But before I get to that, let's talk about the catalyst here. Let's talk about what they're blaming this market sell-off on. Because these fancy, elite, analysts on Wall Street, they can never blame themselves, right? Because they're never wrong. They have to have something to blame this on. Listen, I worked on Wall Street for an awful long time, and I'll tell you that these market analysts are god freaking awful. They go to a fancy, elite Ivy League school, and they get a degree, literally, in how to be stupid. Just because somebody goes on CNBC and makes prognostications about stocks or the market does not mean they know what the hell they're talking about. Trust me, more often than not, these guys are wrong. So, what are they blaming this market sell-off on? Well, the buzzword for the day on Wall Street is tariffs.
You saw it yesterday at 4 o'clock right here on the Fox News channel. President Trump unveiled global tariffs, which have, in the hours since, rattled markets all around the world as other countries are considering retaliation, perhaps.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We cannot pay the deficits of Canada, Mexico, and so many other countries. We used to do it. We can't do it anymore. We take care of countries all over the world.
This morning, but the Treasury Secretary has a warning for other countries.
My advice to every country right now is do not retaliate. Sit back, take it in. Let's see how it goes, because if you retaliate, there will be escalation.
And sure enough, our European friends are freaking out at the idea that their free lunch for over 70 years might be over.
President Trump's announcement of universal tariffs on the whole world, including the European Union, is a major blow to the world economy. I deeply regret this choice. Let's be clear-eyed about the immense consequences. The global economy will massively suffer. Uncertainty will spiral and trigger the rise of further protectionism. The consequences will be dire for millions of people around the globe.
Okay, so forget the fact that van der Leyen and the EU Commission has destroyed the European economies with their fantasy of a green energy global economy. Businesses and the people of Europe have been just decimated with the policies that the EU Commission has pursued for years now. And now they've got something to blame. Oh, it wasn't our policy. It's because Trump is putting tariffs on. And now we have to pay our way. These Europeans hate to pay their fair share. They really hate the idea of a competitive marketplace where they have to go out and they have to produce something. and they have to adopt, business-friendly, economic-friendly policies, which they do not. The elites out of Davos, destroyed the European economy. But like I said, now they've got an issue that they can, glom onto and blame for what's going to be an upcoming increased disaster in the world financial markets. Now, for those of you who are veterans to my channel, I've been talking about this. I warned about the market collapse back on March 11. Let me remind you of this video right here because it is relevant. The video titled, It's Over. And look at the tear that the PE ratio has been on. And now it's just starting to roll over in the markets. And then we'll zoom out and take a look at what a possible sell-off could look like. And then I'm going to tell you how you can make money on it. But now we see that a double top has definitely been formed. You can just draw a line along those two peaks. So even though Friday was a very ugly day, we are still very close to the highs. So I'm calling this early. But let's scale out a little bit more. Let's go to the 1 year. Okay, now we have some important technical information. If we draw a line here along these, what I call V's, you can see that the momentum has just been broken. So we've got the double top combined with that bottom momentum line. You can see the downside risk is very dramatic. It's got small support at 42,000. The next major support is at 39,000. Okay, so I called it early. But listen, I wasn't doing anything really clever. This is, basic technical analysis 101 stuff. So it was a month ago where I was ringing the bell. I was telling you guys that the party was over, that the trend has changed, and to start looking for a deep downside. And I've done follow-up videos since then, giving you an update on how this sell-off is looking. Okay, well, so let's take a look at where we stand today. Let's go back to the market chart. Now, I'm just showing you the Dow Jones Industrial Average because, in the spirit of saving time, I'm not going to go over the charts, of every stock, of every crypto. And hang in there because I am going to talk about cryptos here in a second. Okay, so we saw what the market did here today. Now, let's take a look at what the market did during the course of today. So the market gapped down. So the high here is where the market opened at a gap down. So this is kind of misleading if you look at it for the first time. This is after the market was down, 1,100 points. Then it sold off even more than it did have a market attempt, and it got right up to the opening price and then failed and spent the rest of the day coming down. When you have a market like this, that closes at the low of the day, that does not look good for the next trading day, for tomorrow. And by the way, tomorrow is Friday. And that just adds more worry because, a lot of traders do not want to hold stocks going into the weekend at the tail end of a market crash. So we could see some more panic selling tomorrow. But again, let's scale out. Let's go back to that 2-year chart. Okay, so, that video that I did a month ago, it was way up here. Man, I am looking brilliant. Why don't you guys give me any credit? Why don't you guys ever make comments, in the comment section saying how good I am? Because I usually nail this stuff all the time, but I never get any love from you guys. I mean, come on, give me some comments down below. But again, I want to remind you how important that 42,000 level was. I've been harping on that for weeks, and here we are, we broke it. Now, you always judge the health of a stock or the market or crypto by the quality of their bounces. After we had this real nasty sell-off there for 3 weeks, we had that nice little rally attempt, but now it's behind us. We see the A, we see the resistance levels. That was not an impressive rally attempt, which means that's why I still think we have a lot more downside to this market. Okay, so the next important support level is down here at that 38,000 level. And then the real big support level is down here at 22,000. So yes, we have had a rough month, but relatively speaking, we are still near the high. And this is why 2 weeks ago, I made this video. This is why the markets must go down more. Okay, now this level right here at this 42,000 level, and right now I'm looking at the Dow Jones Industrial Average, right, was the next available support level that I pointed out to you in my previous videos. Because when you're looking at technicals, all these charts is a visual representation of the psychology of the market destroyed. Okay, so let me remind you that markets are made up of human beings, and human beings are emotional creatures, and that is why the market is never going to be a rational place. There are 3 emotions that drive the markets: fear, complacency, and greed. And of those emotions, fear is the dominant emotion. In fact, statistically speaking, stocks and the markets in general, they go down 4 times faster than they go up. So I think we have significant more downside in this market. Now, I promise you that along the way, we're going to have very impressive, very violent rallies. It's going to happen. But the upward trend in this market has been broken. We are in a bear market. Now, they're not calling it that yet, but I was early a month ago. I'm going to be early right now calling this. We are in a bear market. Things are going to go lower. And I suppose in here I should put my disclaimer. I'm not a financial advisor, so always do your own research before doing anything with your money, right? I'm a little late. I should have put that disclaimer in at the beginning. And before I forget, let's talk about the cryptos. Okay, so as of this recording, Bitcoin is down 5% on the day at 82,000. Our XRP is down 12% at 205, and it was down more early on. And just to remind you that when things get ugly, when the market sells off dramatically, the cryptos lead the way down. Well, they lead the way to the upside too. Why is that? That's because the first thing that the markets sell in times of uncertainty are the risk assets, the riskiest assets. And the cryptos reside at the extreme end of the risk spectrum. So cryptos always lead the way down and they lead the way up for that matter. So we should not be surprised that cryptos have taken on the chin. Actually, Bitcoin down 5% on the day. That actually is not that bad considering what the market did today. I mean, in markets like this, what I like to do is look for the stocks or the cryptos that went down the least amount. Don't be looking at the stocks and the cryptos that went along right down with the market. Try to find the ones that did not go down so much, or maybe even went up a little bit in the face of all this, because those are the stocks, those are the cryptos that the market is going to be buying first whenever the market turns around. So in aggregate, I think the market has a lot more downside ahead of it, but at some point, there is going to be a nice, impressive trading rally. This is going to be a trader's market for the foreseeable future. Investors are going to be very frustrated, but if you're a disciplined trader with some skills, you are loving this. A good professional trader loves this kind of volatility. This is how traders make the most money, is when there's volatility they can take advantage of. Now, if you don't have the time to trade or you don't know how to trade, my suggestion to most of you is farm that out to people who are professional traders. I've got a few programs that are doing really well for people in my group where they let professional traders trade it for them. If you want to learn about those, send me an email and I'll invite you to join the Hey Ed WhatsApp group, and you can sit in on my Zoom calls on those programs as I do them. So listen, I know that for a lot of you, it's not fun to see the market, getting destroyed. But for people like me, I'm excited about these kind of markets. Okay, but I got a trader mindset. This kind of volatility doesn't come around all the time, and these are good times for good traders. So even if you're not trading actively, you should still learn how to think like a trader and then apply that to your investments. If you support my channel so we can get this message out to as many people as possible by hitting that like and subscribe button, and hit that alert bell so that you're alerted as I do videos. Ed Anderson, live from Minnesota, signing out.
Copy that.